Folks, Warren Buffett just bought a penny stock, and the just released disclosures show that his firm Berkshire Hathaway is set to become its biggest holder. And this is actually a very unusual buy for him. Not only has he been shoring up most of his capital in cash over the last few years and been super picky with the seldom shares he has bought, but this is also a stock that's been plummeting long term, and one that on the surface you never expect to be a good buy. However, if you do some research, you'll find this company is a cash cow aggressively pivoting and acquiring its way to the top, and one that is likely to continue to set up for a big rebound now that Buffett is a major stakeholder and lots of people know about it. The stock is trading for less than 10 times trailing earnings, and it has a 10-figure free cash flow with consistent profitability year after year after year. And there is an unusual catalyst coming in early September that may mark the beginning of a massive reversal over the coming months. Now remember, Warren Buffett's investment strategy is all about patience, discipline, and finding value in quality businesses. He believes in buying companies that have a strong moat, meaning they have a competitive advantage that protects them from rivals, along with consistent earnings and solid management and ideally cash flow. And when you look into this penny stock that we're going to be talking about today, well, it fits all of this criteria. And it stands out quite a lot just because of the type of company it is. So in today's video, we're going to break down exactly what the stock is, why he might have bought it, the financials, and the upside potential with Berkshire having a seat at the table. And of course, before we get to work on any of this, make sure that you do your own due diligence on all ideas presented here on the channel. If you're the one taking the risk, you got to be the one doing the ultimate frisk. Lots of people, they get real frisky and they don't think about their risky, and vice versa, folks, vice versa. Okay, so let's go ahead and get to work. So the stock that Buffett bought is ticker symbol SIRI, S-I-R-I, for Sirius XM. And in fact, Berkshire had already long owned a stake in it, but Buffett had the stake increased by over 250% in Q2. Now, there's a reason for this, and we're going to get into that a little bit later, but we've all heard of Sirius XM, and to be honest, if Buffett didn't buy it, I wouldn't have given it a second look. On the surface, I would have thought it's just a satellite radio play, and that's of course a hard sell for me. It sounds like a sunset industry that is slowly and steadily dying. However, upon doing research, I believe I found his angle here. You see, SiriusXM is starting to pivot very aggressively and poach high-earning, high eyeball-getting creators from other platforms like Spotify. They're doing this by acquiring some of the biggest talent out there and some of the ones that get the biggest views. They just got Alex Cooper from Call Her Daddy for $125 million. That news came out today. They stole her from Spotify. Every girlfriend I've had has been obsessed with this podcast. Nice market there. They poached the Heartless podcast for $100 million. They got Megyn Kelly, Kevin Hart, Tom Brady, so on and so forth. Not only is SiriusXM aggressively pivoting their business model and acquiring talent at a rapid clip, but they also have a built-in gigantic core audience. They have some 33 million subscribers and 150 million listeners. That's a lot of potential pivot power, right? Now, a lot of people have ignored all of these acquisitions and all of this effort that the company has made because, again, they think, oh, SiriusXM, satellite radio, that's a dying business model. And that's fair enough, that's what I thought, but upon digging deep beneath the surface here after Mr. Buffett bought it, well, it seems pretty damn clear that there's a lot going on here. For starters, I mean, the satellite radio services revenue has been steadily increasing alongside inflation for years, and while it's not going to be the most exciting industry, it does for the moment remain a cash cow and is what is allowing them the capital to continue acquiring talent and even acquiring major entities like Pandora. But more on that later. Why exactly is Mr. Buffett buying Siri stock now? Why is he buying SiriusXM stock today? Well, there's a catalyst coming up. And in order to understand that catalyst, you got to understand the composition of the shares. You see, folks, as of today, media mogul John Maloney is the largest shareholder of SiriusXM. And folks can grab a piece of his controlling position through the ownership of Liberty SiriusXM Group, LSXMA, tracking shares. These tracking shares can be confusing. And they aren't very popular with investors, but that's about to change. You see, Liberty SiriusXM Group investors will vote at the end of next week to see if they want to combine their shares with the more widely owned SiriusXM common stock. If the vote is successful, and it likely will be given Maloney's backing and the fact that these shares trade at a discount to SiriusXM, the transaction should be finalized on September 9th. This was reported from The Fool. Now, you see, Buffett already owns a large stake in Liberty SiriusXM, and of course, he has also, as of the last couple of quarters, been buying very rapidly the main Siri stock. Once they likely combine on September 9th, well, Berkshire is going to be the biggest shareholder. So, bigger picture here, why would Mr. Buffett go guns blaring trying to buy up Siri stock ahead of the merger of the two entities and his two stakes? Why would he want such a massive stake? Why would Warren Buffett, the Buffett of Warren, man, known for his conservative and value-driven investment strategy, make a move on Siri now despite many obvious headwinds to satellite radio? Well, there's actually a lot of big reasons here. If you look at most of Buffett's positions, they almost all have strong cash flow, a near monopoly in their industry, are expanding into new markets, and were bought during a period of time where the stock was obviously undervalued. SiriusXM, if you do a little bit of research on it, actually fits all of this criteria, and at the current point in time, it's really undervalued if you simply look at it as a cash flow generator and not even a growth play. But again, it is also a growth play because of how they're using their capital. They're reinvesting their capital and acquiring talent that is then locked in to their platform. Now, while it's unlikely that the satellite radio industry is going to continue growing, it's likely that Sirius's core satellite demographic will be around generating an increasingly niche, high-margin market for the next decade plus, and it's probably a demographic that Spotify hasn't been able to convert yet. So as we're making that switch from satellite radio to more and more on-demand streaming, well, all of the layover demographic that hasn't been interested in making that switch yet, well, who's going to be best positioned to convert them? Sirius. And in the meantime, if they just want to stay on satellite radio, that's fine because that's very, very high margin. And Sirius can use that money to continue to expand in its streaming business. And that's a huge advantage. But you look at SiriusXM stock, I mean, it's at multi-year lows. It's trading as if this company is going bankrupt by the end of the year, but that's nowhere near the truth. And so when you think about it, there's about 4 core reasons that Buffett is buying this. Number 1, the strong cash flow. SiriusXM generates substantial free cash flow, which is something that Buffett loves in all of his positions. This cash flow allows the company to buy back shares, pay healthy dividends, and reinvest in their business, all signs of a potentially lucrative investment over the long term. Another criteria that Buffett looks for is market dominance. SiriusXM holds a near monopoly in satellite radio with a very strong brand and customer loyalty. Sure, satellite radio is a sunset industry, but this dominance gives them pricing power and a moat against competitors, and again, a bouncing board to continue investing into podcasts and other exclusive content. And of course, in terms of expansion into new markets, SiriusXM is not only pivoting into signing exclusive content, but they've also been on an overall acquisition binge. They acquired Pandora, for example, marking an obvious attempt to compete directly with Spotify and Apple Music. They're aggressively expanding into the streaming space, and they've made some key acquisitions and partnerships that could fuel future growth. In terms of the value of the stock, I mean, this is a undervalued stock. Buffett's team is known for spotting value when others see trouble. With Siri stock trading at depressed levels, they might have seen this as an opportunity to buy a solid company at a discount. Now, in terms of the upside potential, if Buffett is right, and he usually is, what could that mean for SiriusXM stock in the future? What are some areas where SiriusXM could see massive rebounds that drive the stock higher and higher? Well, obviously, there's the clear benefit of just having Buffett as a major shareholder. That's a lot of positive press over a long period of time. Major thing to watch is a subscriber growth rebound. Subscriber growth has been a little mixed over the last few quarters, but as they acquire more talent, this shouldn't be a problem. Every time you bring a podcast onto your platform, you attract the viewers from that podcast to join your platform. You saw this with Joe Rogan and Spotify when they had that original deal, and I have no doubt it's going to happen with SiriusXM. SiriusXM's push into streaming and podcasts will likely attract a new demographic of users who prefer on-demand content. Depending on how well SiriusXM can run acquisitions they've already bought and the ones that they're going to likely buy in the future, well, this can even further position them to grow their podcast and streaming market exposure. Take Pandora as a case study here. SiriusXM bought them in 2019 for $3.5 billion. Now it generates around $2.113 billion a year in revenue. Huge yearly sales boost for $3.5 billion. A lot of people they can cross-market to, a lot of member subscribers they can cross-market to, and a long-term profit opportunity there for not much money. Number 3, I think another thing that's going to drive SiriusXM stock higher is its continued share buybacks. Because SiriusXM has a strong cash flow, it's been on a very aggressive share buyback program, and it seems to be the case that that's going to continue, as is the case with many Buffett stocks. There's also dividend growth. Of course, Buffett loves companies that pay dividends, and SiriusXM is no exception. The company has a history of returning capital to shareholders through dividends. With their strong cash flow, we could see these dividends grow over time. I would actually like to see them do less dividends and more acquisitions and more investments into acquiring talent. But hey, dividends are okay too. Okay, but what about the downsides? Well, obviously, no investment is without risks, and Buffett has been wrong sometimes. And SiriusXM is also a potential risk. Obviously, there's a massive competitive landscape in audio entertainment, and it's quite intense. You have players like Spotify, Apple Music, and Amazon Music. And it does seem that Sirius is playing a bit of catch up with those players. However, they are well capitalized, and they have shown some proof of concept in terms of being able to acquire talent. And if they continue to do that and they continue to hold those 150 million listeners and 33 million subscribers and just grow them slowly and steadily, well, I could see this stock printing over the coming years. What is your thought process on this stock? Is it going to head for a turnaround? Was Buffett right? Let us know down below. Have a good one, folks. We'll see you in the next video.